Okay, we're here. We are trading the FOMC live today. Jerome Powell going to announce the interest rate cut. Hopefully, he's going to announce an interest rate cut, but that's not what it's all about. We want to see what happens in what they call the dot plot. So we're going to wait to see what the Fed officials predict that is going to happen with the interest rates next year, which is called the dot plot. That's going to be interesting. It's going to break in about 1 minute. In about 1 minute, we're going to get it, and our researchers are going to fire away here. As we get to the 1 minute mark, we have altcoins red. We have Bitcoin at 104,662. We're going to be doing everything live here on Crypto Live. So you need to subscribe to this channel, subscribe to this channel. Let everybody know that we're here by smashing the like button. Okay, we have the first bit of news. We have the rate cut. The rate cut is 25 basis points. As we thought would happen, we got the 25 basis point rate cut. Let's see how the market's responding. The market's going to tell us a story. The story is going to be whether or not we're going to get a good dot plot. All right, researchers, let's get reading. What does the dot plot look like? All right, so what we know so far, market's not really responding very much, as you can see. Bitcoin is still at 104,403. Not much action. Let's wait. There we go. Hold on, let's go. Awaiting. The dot plot is not out yet. We're waiting for the dot plot. Guys, while we're here, smash the like button. Let everybody know that we're here on Crypto Banter Plus, on Crypto Banter Live. Also, what you need to do is subscribe to the channel if you're not already subscribed. This is where we come to you and we bring you this kind of alpha. Okay, dot plot is not out yet. Hold on, not out yet. Here we go. FOMC median Fed forecast shows 50 basis points of rate cuts in 2025 to 3.9%. Not good. We wanted 3 rate cuts in the dot plot, which is why Bitcoin is now coming down to 104,200. So slightly bad. We were hoping, let's get Dylan in here as well. We were hoping for a, hello Dylan. Okay, so we were hoping for a 50 basis point, we were hoping for 75 basis point rate cut in 2025, and the median Fed official is looking for a, here we go, here is a dot plot over here. Let's quickly just show it over here. Okay, so the Fed cuts rates by 50 basis points as expected. Cleveland Fed President 𝗕𝗢𝗥𝗘 dissented. The SEP shows a median of 2 cuts in 2025. Also, officials revised up their 2025 inflation projection to 2.5%. So far, this is what is known as a hawkish stance. In other words, it's not as bullish as we thought. It's not as dovish as we thought. Dill, let's do the charts. Maybe you're going to share your screen. Maybe let's look at the charts and see what's happening on the short-term charts. Remember, we're going to be with you here until the end of the presser. If you're not already subscribed. Otherwise, like this content. Let everybody know that we are live on this channel, because, you know, there's some dorks that are waiting for us on the other channel. We told them we're going to be on this channel. I mean, no, this is not a joke. This is a true story. Okay, so let me show you. This is a true story. Look here. So it's a true story. If you go to Crypto Banter, we put a thumbnail up. In that thumbnail, we said, look here. We said, guys, Run is live on the other channel. There's 778.
They don't read.
There's 778 people waiting there.
Guys,
goodness gracious. And look, they're complaining in the chat. Run is always late. No, bro.
You guys need to read. It's very simple.
Artist, can you go to the other YouTube, and can you, in the comments of the other YouTube, tell people we're in the other YouTube and drop the link?
I've got it pinned at the top there, sir.
Yeah, no, but just go into the chat of the other one and tell them. I mean, there's 778 people. They're all complaining that I'm late. He's going to join after the party. And no, guys, the party's at a different nightclub. Read.
Run. How was your party though? Weren't you at a party?
I was having some tequilas. I'm all right. I'm
How many
okay.
are you down?
7 tequilas.
7 down though.
Yes, sir.
I'm watching the CME here. This is Bitcoin CME chart, 15 minutes. I just wanted to bring this to everyone's attention. I was talking about this on my show, and I was saying if we get some kind of bearish statements or something in the press conference, we might get this wick down to close the CME gap. That is my first sort of zone.
What level is the CME gap?
So it's everything down to 102K. So you can see this is the 15-minute chart. So, you know, these guys love to come and close these gaps. So we're just watching this one. You can see we're floating around at the top at the moment. But yeah, lots of games to be played, but nice little area here. If there's a little bit of a bearish comment or two, we might get that wick there, but it might offer some nice longs here on BTC.
Okay, let's just quickly see what I don't see prices on your charts. Very confusing. I know when you can't see a price on a chart.
Yeah, hold on.
Okay,
Can you not see the prices here?
No, we can't see the prices. Very small, bro. Very small.
Okay, well, let's dial into some smaller time frames.
US rate futures price in more than a 90% chance that Fed will hold rates static in January. Okay, that's the latest thing that we got. It's a hawkish plot. No cut in January already being priced in. Only 50 basis point rate cuts in 2025. So they're not expecting a very quick rate cut regime, so to speak. They're not expecting it. Guys, obliterate the like button so we can get our friends from the other channel here. Still 753 of them waiting. Why so late?
Where does this leave you, Run, with your macro view here? Are we turning a little bit bearish on the markets for short term?
I think Trump will sort shit out, bro. I think Trump will sort shit out. You know, guys, Harry, we are live here. We've got to tell the other people, the people that are not as fast as the other people. These are like, you know what these guys are? These guys are like those people that you give a name of a meme coin and then they go and trade the wrong contract code, right? Okay. Fed's median forecast, rate forecast end of 2024, 4.4%. Median forecast end of 25, 3.9%. Previously, they thought that the rates would be lower at the end of 2025. And so now what's happening is, so at the end of 2026, 2.9%. So like, okay, I see. So they're now expecting the rates to go down slower. That would actually be bad for markets. That's a bad thing for markets. That's why Bitcoin's slightly coming down. I think the market shakes this off though. My feeling is the market shakes this off.
Look, my view on like I track the altcoins the most, but we've had a 24-hour basically sell off on these altcoins, like predicting this bearish move here. So yeah, I mean, we were looking at a couple of longs on some alts today, but I'm still thinking, you know, for me, my longer term view on alts is still quite bearish, but I think short term we're getting some bounces here for now.
You think, okay, bounce is interesting that you say that, because I mean the market's being a little bit bearish, if you want to call it that. Bitcoin's at 103. I mean, still 103 is not bearish. 103 is not bearish.
It's the alts that have been bothering me. We've had dominance pumping for 2 weeks, putting us under pressure. We're moving into a dominance resistance band just now. So I'm looking for a rejection at that point today. So, I mean, if you look at a couple of these altcoin charts, though, they look pretty bearish. I mean, look at Sol. We're looking at potential longs here at 195, those types of levels at the moment. So short-term bounces along the way is what we're trying to plan today. But I think ultimately we're coming to lower levels on some of these alts, unless there's some kind of miraculous play. Look at this. This is Brett, still in a downtrend here, looking a little bit bearish.
Do you want a stinky degen? Do you want a stinky degen call? You're talking about meme coins. I've got a stinky one for you, boy.
What do you got?
It's the founder's dog on Sui. Telling you, I've got the inside scoop here. The founder's dog.
What's the ticker? What is this thing? Is it called founder's dog?
No, man. I'll show you what it is. But don't tell anyone, okay? Because it's like this is like low cap, bro. This is like low cap shit.
What am I looking for?
I shouldn't have come in at tequilas. Now I'm opening up here. The founder's dog on Sui is actually called Uni. Believe it or not, the guy's got a dog called Uni. I mean, how can you be on Sui? Uniswap is the biggest DEX on ETH, and then you've got the founder's dog of Sui called Uni. I'm telling you, this one's DJ.
A banger. It's a banger,
bro. It's a banger. I actually wasn't supposed to share it, but it's fine.
Your dog Uni, it's a banger.
Yeah.
$18 million market cap already.
Oh, is it 18? Okay, that's good. 18's fine. Okay, so not much action happening here. I mean, the altcoins. I'm trying to get an entry into this PENGU, bro. I went long earlier. You see, I'm up $7,000 on this long.
Look, I think it's a trade. I really do.
It's a trade.
You know what happens? The airdrop, everyone sells off, but then you get the guys that know and they start buying more, and you get some guys that don't sell. So yeah, you can see it's trending higher now. I think it is a trade.
Correct. Guys, smash up the like button. And I mean, if you've got any friends that are in the other channel, they shouldn't be your friends, because we literally said link below. Attention, Randy's going live on Crypto Live. Link below. Link below. Hi everyone. Hi everyone. We are live on the other channel.
See, this S&P's rolling over a bit as well.
Oh, show me the S&P.
So the S&P on the daily that I track, but you can see this is the most bearish it's been in a while. That's quite a big candle here. Let's look at the 15 minutes.
But you're trading. Still, can we not see your sidebar there? Can you not give us a sidebar so we can see the numbers? We can just see like
I don't know, but I can see the
charts.
numbers. Yeah, I don't know why you can't see that. That's pretty weird.
Can we resize Dylan a bit there? But I don't mean his package. I mean just the box of the thing.
It's small enough. You can't make it smaller. Look at this. I don't know why you can't see that. I mean, I can see it in front of me here, but this S&P falling over, that's quite a strong sell-off here.
What? You're talking like less than 1% there. You probably what time frames are you trading this in?
I've dialed into the 15 minutes. I know you like to watch the action.
Okay, wait. Let's actually look at real charts. Hold on a second. Here's the real chart for you. That is down. So right now it's down 0.5%. Bro, 0.5% is for ants.
No, I know, but for the degen traders watching this, I mean, look at the sell-off relative to
MicroStrategy 378, 379. Okay, MicroStrategy 378, 379. Let's see what's going on here. We got Powell will come on in a few minutes. We'll obviously watch it when Powell does come on. Let's have a look here. Okay, so the only news is the median forecast and the dot plot. Otherwise, Bitcoin is. Altcoins slightly down, Bitcoin slightly down. I think you got to let this thing shake off a little bit, hey? Is my trend line correct here? Because I actually don't know where to draw the trend line here. Is it here, or where would you actually draw this trend line?
Trend lines are the most subjective things, aren't they?
Yeah, I mean, fuck. Wicks. Where are the wicks?
I like to use the wicks. For me, I like to use the wicks.
Okay, so where would you put this trend line? Where would you put this trend line? Like the most wicks is here, right?
Most touches that you can get. So that's
about right.
More touches, the stronger for me.
No, so we only break the trend down at 102, bro. That's forever from here.
Yeah, no, there's a big level on the 3-day that I've been tracking. It's 99 to 100 and then 94. Those are
let's see your show us. Where are you, sir? Are you at home or where are you? I haven't seen you at the office the last couple of days.
Yeah, the kids are on holiday. I've been entertaining.
Oh, are you the entertainer? Okay, I understand.
Yeah, head of entertainment. Yeah. So yeah, this is my 3-day that I'm tracking, and we can't be bearish on this thing until we start losing, 99, those type of levels. So right now I'm still on track for 113. It might be a story to get there. We could get that sell-off now that a lot of people.
You know what I'm watching? Watch the Dixie, sir. The Dixie likes this move, obviously.
See, we're getting a little bounce here.
Let's see here. Look, I mean, that's quite a candle there, eh? Dixie's at 107, bro. Nearly 108, but Dixie's probably at a high.
But the Dixie's bumping though. It's not
but I know, but you know the thing. You know why this actually encourages me is because if the Dixie is high and Bitcoin still at 103, what's going to happen when Bitcoin goes low, bro? Because I'll show you something. I want to show you something. If you go, let's just go to the 1 month, just to go back. I'll show you a little chart here. Jeez, I've had a lot of tequila. Oof. When I cough, I can smell it. So if you look at when Trump came to power the first time, here. 2016. Here we go. It's there. See the Dixie pumped from the election all the way to the inauguration, and then at the inauguration, you see the Dixie went. Yeah, let's actually go.
The inauguration. It's early January.
Yeah, and then the Dixie just fucking collapsed, and that's when everything went on a run. So yeah, I'll show it to you. Maybe even
version 2 on its way.
See, look here. So that happened like here. Remember? You asked me why I remember because I was short the markets like an asshole. Anyway, so Dixie pumped from November over here. You see where he won the elections. Dixie pumped all the way up to here. And then at the inauguration, it collapsed basically. So maybe Trump's going to do the same thing again.
Look, I've seen a lot of comments about bearish in December, and then the alts really start shining, and the market starts shining January to May. So I'm kind of still suspiciously waiting for a little sell-off. We got 2 weeks to go till the end of the year, or just under. I'm a little bit nervous with the market at the moment. I'm not going to lie.
Hold on. So So someone tweeted, it's actually quite smart. CoinMumber says 25 basis points cut today. 50 basis point cuts for the whole of next year. Powell can't be too dovish on the press conference. Otherwise, the question will be, if you don't think inflation is coming down, why are you cutting today? So he's not going to be too dovish, and they're probably not going to announce. They're probably not going to announce something here. Okay.
May God save us, sounds that comment.
Okay. Hold on a second. Let's have a look here. Okay, I'm trying to read. If you want to, by the way, if you want to follow the research group, you can actually do the same thing. You can just go into the newsroom over here. Everything that I see, you see. See, that's coming through the news group. You see that there's that tweet over there. Dollar climbs to the highest level since November 2022. Crazy shit. Okay. So not good for my alts, and I've got some leveraged longs here, bro.
What are you sitting in here? What do you got here?
I've got
PENGU.
PENGU.
A handful. You don't have many.
PENGU's done. And I've got some, like I was stupid. I bought 𝗧𝗢𝗙 because I just got caught up. I took a long on PopCat. I don't know why I took this long on PopCat at near the time.
I'm so under pressure on PopCat. My liquidation's at 74. And you want to see the chart? I'll take you through it quickly. But yeah, I keep adding on these dips for PopCat, but it's how big is your PopCat position?
My PopCat, no, it's a leverage position, 200K, but still, like, I just don't like red on my portfolio in the bull market. Anyway,
it's crap seeing these red trades. We're supposed to be pumping, but
that's
I'm
a
underwater.
head and shoulders on PopCat, which is not a good. It's a head and shoulders that.
So it's playing out. I gave this trade today as a spot trade on my show, but what are we moving into here is the 200-day moving average. I got a massive 618. I got the horizontals. It's a nice zone. Okay, and
you
then my
love
chart
these
prime,
zones, eh? You love to scalp these bottom zone things,
zones. I love it. And these chart primes telling me we're going to get some kind of reversal on the daily, but it might take a couple of days here. But we're almost there. We're almost at these lows. So
you gung-ho now. You gung-ho now on chart prime, eh? You love the chart prime system. You love it, eh? Yeah, yeah. Much better than the other one, eh?
No, I enjoy it. But anyway, look, anyone trading PopCat here, 94 is a zone down to about 91. I think where's your cut? Where are you taking it out? Are you going to stop out?
Nah, I'll just ride it for the rest of the bull market if I have to. It'll come back.
So I've got more buys at about 86, 87, just in case there's another wick there. But yeah, I had a high conviction play on PopCat, so obviously looking for that bounce now.
I also want that bounce. I need that bounce urgently.
It's getting messy.
Yeah, you see, 𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 is doing us a big favor here. I don't know if you've noticed, but 𝗏𝗏𝗏𝗏𝗏𝗏𝗏 is recruiting the 446 dumbasses that are still in the other chat. Guys, it's not starting. Like, you understand it's not starting? Like, it's starting. It's already started on the other show. Oaks are complaining. Run is live. Run is late. Yeah, come on, guys. Wakey, rise and shine.
Where are you on WIF, Run?
WIF was coming down hard today. You know, the truth is I'm not that bullish on meme coins anymore. I love meme coins, but I'm much more bullish on AI coins. Much more bullish on that. Much more bullish.
Short term, or are you saying going forward you're going to steer away from some of these memes?
Going forward, I don't. I mean, I've got some nice memes. We caught Lofi. We caught 𝗕𝗢𝗙𝗢𝗙, that other 𝗬𝗎 one. You know, but like I've reduced my meme exposure a lot. A lot. Okay, hold on. We have Dan Held and Matt Hogan tomorrow at 17:45. Joey Krug can join at 6, but we can't push back the show for him. I don't know, bro. Angela, just make a decision. Okay. Okay, so what? Let's look at the charts. What's going on? So Bitcoin 103,596. Powell can't be... You know, the thing is, I was hoping that they were going to announce today that they were going to start doing buybacks on their balance sheet, but it's not going to happen if they... I mean, there's one guy dissented. He didn't even want the rate cut. It's not good. Basically, they're scared of inflation again. They're scared of inflation, which is weird.
So no Santa Claus rally.
I don't know. I think the market brushes this off. You know when oaks are bullish, bro. They don't care about, like, you know, like when people are bullish, bro, that like macro, they brush off information like this.
Yeah, look, for me, I mean, the sell-off today on these alts was a sign that we needed to look for something. So, yeah, I mean, I don't think it's going to be too severe, but I mean, I don't really like what I'm seeing at the moment.
Yeah, geez, I'm a bit drunk. Oof. Sheesh, I must say.
But you don't even drink. You're a gummy.
I know. I drink every now and then, and when I do, it's quite a problem.
You do it properly.
Apparently, if you drink water, it goes away. Someone says AO's pumping. Is AO's pumping? Let's have a look here. AOZ, AIOZ, AIOZ. Good token, good product, good project. We've been investors for a long time. Oh, pumping.
Is that the daily? Yeah.
That's the daily candle. Yeah, I'm looking at the daily. Yeah, I know it's long time frame for you. It's up. Yeah, it's pumping. Let's just have a look here. We can look at the hourly on the bubbles. You can see what's pumping. AOZ up 3%. PENGU up 2.59%. Everything else down. Hyperliquid down. I called the short here at 28. I didn't take the short. I just called it. You know why I can't take the short? Because I'm on this Bybit account, and you have to make your account unified in order to take the short, and I can't make my account unified. Okay, let's see.
Why don't you? Don't you just
because
click
I
some
can't.
button?
When I do, it tells me I've got to close some leverage and reopen it and all that shit.
Yeah. And you got that
Okay.
sold position.
Breaking. The Federal Reserve has cut their 2025 projections on rate cuts from 3 to 2. Yes, Shubham, we know that, sir. The median PC inflation. Yes, we know all of this, sir. We know all of this. We need things we don't know, sir. We've already know this. Please don't come on playing with fire unnecessary. I don't understand what. Why isn't Fefe on? Fefe, jump on, bro.
Is he? Yeah.
He's. I can see him in the other chat. He's in the management chat, which I'm watching. By the way, if you want to watch live news here, we're just passing time now until we get the actual stream of the Fed. Let's just see where Fed stream link. Okay. Guys, smash the like button, obliterate it. I can see, I mean, it's amazing. We've got 6,500 people here. Probably the biggest crypto stream on Crypto Live, which is amazing. You know what I love about the Fed? I love the music they play.
It's so relaxing. It's the elevator music.
Oh my God. Terrible music. I'm not going to pause it. I'm just going to mute it until Powell comes on because we want to know when he's coming on. Oh, what's happening on the 1 minute charts there, Dylan?
Well, let's see what we got. Lots of volatility here.
I think this market, I just want to say for the record, I think this market shakes this off. And I think tomorrow we're back at 105,000. I just want to say that.
Look, the timing would be nice. I don't know if you track dominance that much, but
I do.
Look at this dominance. Look at this thing.
It's back in the trend. Back. Look,
this is the weekly. Okay, this is the weekly dominance chart, and we're pushing into a rejection zone here. So what I wanted was a little bit of bearish news today into that 50-day MA, and then we just unleash the alts again.
Do you know what the difference between you and Sheldon is, Dylan?
Yes, sir.
Sheldon always wants bullish news. You always want bearish news, bro. You love to catch bearish things, bro.
I get the entries when things are bearish. That's my thing.
Love that shit, bro. Yeah.
So we're almost there.
Oh, look, look at the channel. You see that beautiful channel? You see that? You see that lovely channel that I got over here? You see now, if you zoom in here, you can see we're breaking down from that channel.
I can't see your chart for some reason. I can only see.
Hold on. Let me switch it for you.
There you go.
You see, look at that. You see that? You see how it's tickling that? You see
you're also doing fun stuff.
You see how it's tickling there, boy. You see how it's out of that. It's out of that upward trend. Hold on. Paulo is our meme coin man. He says meow is putting in a all-time high into FOMC. Just saying. I mean, meow. He called meow very, very, very early. He called meow very, very early. Let's see what's going on here. Dow Jones is down 0.5%. Okay, this is interesting. The unemployment expectations. So the Fed's unemployment expectations is supposed to be 4.3 1 year from today. Today it's 4.2. So they're expecting more or less the same rate of unemployment. No, come on, man. Wow, when did they turn so bearish? Paulo says he called meow on that meme show at $1 million. So he's made 20x. Yeah, let me just ask him something. Why do you still work, sir?
Because it's the others that went to zero.
He's called like 100x. No, but he's been on fire, bro. Morpho, Puffer, Meow, the Oaks. I mean, the Oak must be richer than me. He's got to be the richest Oak in the company. He says he works for shits and giggles. Yeah, he's definitely the richest guy in the company. Yeah. Definitely. He's fucking got a Midas touch, this oak. He's got a Midas touch. All right, let's see what's going on here. Bitcoin back at 1. I'm telling you 105 tomorrow morning. Mark my words here. 105 tomorrow morning. 105. I'm telling you. Let's find Sheldon and see what Sheldon says. Hold on.
I think Sheldon's live at the moment.
Doesn't matter. We'll disturb him. Doesn't matter. We don't care about things like that on this channel. No, he's live on his Sheldon Sniper Club. No, he's not answering our call. Ugh, what can we do? Okay, let's see. Where is the Fed's music? We've got 5 more minutes before Powell comes on. 5 more minutes. We can do some Q&A for 5 minutes. Actually, I want to see where Fartcoin is, because TradFi hate this coin. This is the ultimate. These oaks work so hard for the TradFi guys work so hard for their 8% a year or whatever they get. And now this Fartcoin goes to $1 billion. Fartcoin. I mean, this must be the most hated rally in the world. Hey, this is the hated rally.
It's insane. There was an interesting tweet the other day. It's never try and be too clever in crypto. I mean,
yeah, it's true. Wait, Sheldon's here. Hold on, Sheldino's here. Hello.
If there is anyone that wants to chart and help us along, there we go.
Oh, what's up?
Hello, sir.
Hello, we got Sheldon here on the phone. What's up, bro?
We're gonna buy the dip or what? I got Sniper Club here.
What you thinking, bro?
There's liquidity at 102, 101, 102. I think it's an FOMC dip. You know it, bro.
There's no FOMC dip, bro.
Ladder up.
This dip's finished.
Another quick shakeout and we go. But I think dominance is going to come down. And I think it's going to be a massive strength within alts from here. So you just got to get through this little dip now. And trust me, buy Phantom. Phantom's at 102, sir. Or
102?
No, it's 1.2 or something.
Oh, 1.2. I was gonna say.
What was it? 1.5 2 days ago. Phantom is great. Solana's sitting close to $200. There's good specials here. They're not going to last that long, sir.
Yeah, I agree. What are you on a stream, bro?
Sniper Club, yes, sir. We live here with Sniper Club. I'm charting and trading with them.
We live here with the rest of the community. Send love to the sniperoos, bro.
Yes, lots of love, guys. Lots of love. Right, are you trading or what?
I am. I'm trading. I've got lots of longs, lots of shorts open. I've got a long on PENGU, which I think is starting to make some money. Telling you PENGU. I'm telling you buy PENGU. Buy PENGU.
Okay, I'll buy PENGU. I'll buy it.
Yeah, I'm making.
Are you on StreamYard?
We are on VMix, but join us when you want. Hardest is here. Join us whenever you want, sir.
Okay, tell him to send me a link. I'll join in between while I'm busy here.
Okay, send Sheldino a link. Much love, bro.
Much love, sir.
That's Sheldino's charting in his Sniper Club. All right, guys. First of all, we're going to be live with Powell in a few minutes, in a few seconds. Let's just because remember, we got to get our screens ready for this. So we want to watch a little bit of Bitcoin. So let's get the screen ready for Bitcoin so we can watch the Bitcoin, and we should probably go down to the 3-minute chart here. Okay, then here we should probably open. What should we watch here? Give me a nice chart to watch here.
S&P's quite fun.
That's quite boring, I'd say. Okay, wait, and then we need to actually find the YouTube stream. Here's the YouTube stream. What the hell was that? Okay, let's see. That's Powell. Let's put some of my leverage. Did you just flush the toilet there, Dylan?
No, bro. It's not me.
Okay. What is that noise?
Maybe it's Hardest. It's not me.
Oh, that's gone. What is that noise, Hardest? Okay, strange, but okay, we'll take it. Okay, let's see what's going on here. Let's bring some leverage positions open here. So we got Powell. Here we should watch dominance, I think, as well. So we got Powell over here. Then we have dominance. Hold on. Okay. Wait a second. Too many windows open here. Okay. There we go. There's your Bitcoin chart. Let's do the Bitcoin chart here. And And we should probably get us nice. So there's the Bitcoin chart. That's the Bitcoin on the 3-minute. Here's Powell. Amazing. Here we'll put a Bitcoin dominance chart for us, so we can all see dominance. BTC.D.
Yo, sir.
Oh, the man with the money. The man with the money.
The man with the money. I'm just coming here. I'm just coming here, just helping you guys how the market is going to move. So I just came for the watch party.
Okay, we're all good. We're all good, sir. We're all good, sir. Grab yourself a tequila. I'm telling you, this penguin's got fucking legs. I'm telling you, this penguin's got legs.
Where is it at?
Now 39. I'm a bit drunk, and I know I should never trade when I'm drunk, but fuck it, I'm gonna take some more here, just for the fun of it. Pa! Order submitted. Hit me, baby. Hit me, baby. Your entire order has been filled.
So what's happening? Are we?
Let's take some more.
I just joined.
Let's take some more, bro. More. Order submitted.
In the morning.
Is that true that there is only 2 rate cuts projected for next year?
That's correct, sir. Only two, sir.
Okay,
wait. Powell's coming. Guys. Shh. It's important. Okay, wait. Hold on. Why is there no volume here? Talk, bro.
I can't hear.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the American people.
How does that say no sound?
The economy is strong overall and has made significant progress.
Can you all hear it?
Hear it. Good.
Over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about.
Oh, that's good. That means okay. There we go. Reducing securities holdings is good.
Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions, are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market while establishing further progress, enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint
Look how
too
cool the
slowly
bubbles are.
or
The
too
new
little
bubbles are live.
could unduly weaken economic activity.
So that
and
they don't
employment.
refresh anymore, they're live.
In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving
Fuck,
outlook,
that's
and the
so
balance
cool.
of risks. We're not on any preset course. In our
Looks so
summary of
smooth,
economic
Ty.
projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all
105 by
Americans.
tomorrow, bro.
We understand that our actions affect communities, families, and businesses across the country. Everything we
How's
do
the
is in
tequila,
service to our public
I'm
mission.
drunk, bro.
We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to
I think
your
my
questions.
PENGU trade is now starting to go down. Gina, here we go.
Looking great.
Yeah, it's
Gina
not
destroys
good.
things.
Gina Smialik with the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market
if the Bitcoin number
are
can't go
solid,
up, can
we
we
can
just
be
maybe get
cautious
this number
about
at least
as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of down 2 cuts next year compared to 4 in September.
Let's see if we can get to 33,000. Go, guys.
Ren, drop his t-shirt if we do.
Thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024
just to show a guy that I can make money
expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this. Some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation.
I left the party for this.
The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the
not good, though.
document.
It's not good.
The upside risk
Who
to
cares?
inflation
Trump's coming
jumped
into
quite
power, and Trump's going to tell these guys to shut
substantially.
up and do what he
The only thing
says.
really that's
Come on,
happened,
you know
mentioned
that.
that the disinflationary story remains intact.
Short term,
yet
not
the
good.
risk weighting
BOJ
has
meeting
jumped to
tomorrow
the
as well.
upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track, but once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Thank you, Chris Regaver at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the 𝗕𝗢𝗕𝗙 discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were two simulations. One was seeing through, one was not, and I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
I bet you'll be back at 105 tomorrow.
Just a quick follow-up. Given the recent bout of inflation that we've been through with consumers seeing how prices can
before
rise
end of December, sub 100.
Seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be?
How is that PENGU looking,
so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries,
under the influence,
for how long, in what size. We don't know whether there'll be
This is the merch.
Tariffs.
Don't trade.
We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened.
I can fix this, bro.
We've just been through a period of high inflation. We've just gotten through that period. That's a difference. There's also quite a bit that may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers.
Ladies and gentlemen, welcome to Gummy.
So we have we have inflation coming down, core inflation coming down to 2.5.
Ladies and gentlemen, welcome to Gummy.
That'd be significant progress.
Yummy, yummy.
You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still
good job,
out there very gradually cooling so far in an orderly.
What did he say? Someone says he says, good job, Ran is the founder. He'd be sacked in the morning. This guy's boring the shit out of me, bro.
But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which is...
Play, bro.
So that's not any decision that we've made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly that distance has shrunk by 100 basis points, so it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests again that we're at a place where we assuming the economy develops as expected, we're at or near a level that and we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And, I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think.
What's this?
When that happens.
Yo, nice unicorn, bruh. Take that shot.
Michael McKee from Bloomberg Radio and Television.
What are the strongest Hungarian spirits, bro?
By 100 basis points this year. We haven't seen much change in mortgages, auto loan rates, or credit card rates.
We drink that for breakfast.
You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
Yeah. So, we'll take care, guys. Ciao, ciao.
The rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do.
Dylan, what's happening on the 1 minute?
We look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very
long on Bitcoin.
Say that again?
102,600 might be a little scalp long there.
Jesus. Can't believe he's saying that. He was actually really boring me, that guy. I mean, he really boring today. I must say, I think his performance today was substandard.
Look, he's not the most exciting guy.
Yeah. I think in general, I think his performance was substandard. And people are talking about the Dixie. Let's look at the Dixie. The Dixie was a 108, bro. 108. That's like, let's have a look here. Dixie. 107.945. That's like, yo. We.
Look, I must say, Bitcoin on the 1 hour looks a little bit
natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts, included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates. And, we made, look at the broader sweep, we've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services.
Over that line, eh?
Market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly. And
but I can't hear you. Got to go.
We think they don't really tell us much about the.
What you were saying?
Dominance on the weekly just looks okay. I think it's short-term pain if you're watching those lower time frames.
Yeah. You can see it's just broken back into that trend. That trend was at 57.81. It's at 57.93. Yeah, okay, so a slightly hawkish FOMC, I won't lie. But I guess I think the market will shake it off. I think when you're in bullish markets generally shake it off. The thing with this market is there's no leverage. That's like, usually in a situation like this, you'd expect like a leverage flush, but there's no leverage in this market. Like zero leverage.
They've cleaned everyone out. I mean, all the altcoin traders have been wiped out now. The last.
Yeah, let's just quickly look at the funding heat map. Yeah, we can leave that page. Let's just look at the funding heat map. Oh, it's looking amazing, bro. I mean, there's like a negative funding on some coins. Okay, that's Athena. So, I don't know. Strange. I think there's not much to carry on here today. I think we've pretty much covered it. Most boring FOMC meeting in the world. Very uninspiring. My PENGU trade is down.
Dude, you made me buy the top of PENGU. I'm going to get rinsed on this thing.
It's not looking good, bro. And I took this blur trade. I'm down 40K.
Ooh, that's a burn.
Yeah, that's now a long-term hold. No, that's a long-term hold, bro. That's now becoming. That's part of the long-term portfolio now.
You're not a proper long-term investor in that one. Okay.
Proper long-term investor. But and PopCat, I think I'm also a long-term investor now in PopCat.
PopCat's going to end.
66 grand down. Oh,
dude, I'm getting so rinsed in PopCat. Like.
Yeah, it serves us right. It serves us right for buying a cat on Solana. Yeah, okay. I mean, it's a depressing FOMC. I think what we'll do is we will see everybody again tomorrow. Remember, if you're not already subscribed, subscribe. Otherwise, join the Lord of Entry and the Lord of Exit tomorrow at normal programming hours. Until then, trade well, my friends.